You ever look at the news and just feel like you're getting hit with a dozen different stories that have absolutely nothing to do with each other? One minute you're reading about Wall Street, the next, some wild political idea? Well, today we're going to connect those dots because it turns out they're all part of one single massive story about where finance is headed. And it starts with a number that's pretty hard to ignore.
$2 trillion. That's a 2 with 12 zeros after it. And no, this is not a number from some sci-fi movie. This is a very, very serious prediction from a major global bank, Standard Chartered, for an entirely new kind of financial market that's bubbling up.
So is that just a fantasy, a big headline-grabbing number designed to get our attention? Or are we actually watching the future of finance get built right here, right now? Well, that's the big question we're going to tackle in this explainer, and we're going to do it by looking at the hard evidence on the ground.
To answer that question, let's start by breaking down this massive prediction. We've got to understand where a bank like Standard Chartered thinks all this value is actually going to come from.
See, this prediction isn't about just one thing. It's about a process called tokenization, which is basically creating digital versions or tokens of real-world assets and putting them on a blockchain. And Standard Chartered sees this value coming from everywhere. $750 billion in tokenized money market funds, another $750 billion in tokenized stocks, and $500 billion more from things like private equity and even real estate, the whole shebang.
Now, to really get your head around the scale here, just think about this. The market for all these tokenized assets is about $35 billion today. To get to $2 trillion, we're talking about a growth of more than 57 times. That's not just growth, that is an absolute explosion, and they're predicting it could happen in just the next 3 years.
Okay, a 57x explosion sounds great in a report, but is anyone actually building the pipes for it? Is the plumbing there? Well, the answer is a big, resounding yes. Wall Street is laying down new financial plumbing as we speak, and you might be surprised to hear a lot of it is being built on Ethereum.
And this isn't some small side experiment either. Get this, in just one quarter, PayPal's stablecoin processed $18.6 billion in transfers on Ethereum. That's a 260% jump from the year before. This is real-world, large-scale adoption happening right now. And it's not just PayPal. The whole market for tokenized funds on Ethereum has surged by nearly 2,000% just since the beginning of this year. Yeah, you heard that right. 2,000%. That is the kind of rocket fuel growth that signals a major inflection point. And guess who's driving this? The biggest names in finance. BlackRock, the world's largest asset manager, already has a tokenized fund worth over $2 billion. Fidelity and Franklin Templeton, they're right there with them, managing hundreds of millions. The takeaway here is crystal clear. The giants of old-school finance are placing huge bets on Ethereum as the foundation for this new world.
And this goes way beyond just funds. The entire market for what's called real-world assets, or RWAs, has already topped $19 billion, and the number of people holding them is growing like crazy. The system is being built, and people are already starting to use it.
Okay, so the tech and the institutions, that's one massive piece of the puzzle. But markets are also about people, right? They're about beliefs and fears and what people suddenly decide is important. So let's try to decode what's happening with how investors are feeling right now.
Let's take the case of James Chanos. He's a legendary short seller, famous for betting against companies. For a long time, he was shorting companies that held a lot of Bitcoin. But just recently, he announced he closed that position. Now, when a famous market bear gives up, it's often a huge signal that the worst might be over, and confidence is starting to creep back in. Or check out the incredible story of a crypto token called Zcash. For 3 years, it was just kind of quiet, trading around $40. Then, starting in early October, something snapped. In just 5 weeks, the price shot up tenfold, peaking at over $700. That isn't just a price bump, folks. That is a demand shock. But what are people suddenly so desperate for? Well, the answer is privacy. Zcash is a cryptocurrency that's built from the ground up for anonymous transactions. As Bitcoin gets more mainstream, more corporate, more transparent, it looks like some investors are sending a really powerful signal that they still want financial privacy. It uses this cool tech called zero-knowledge proofs to verify transactions without revealing any of the juicy details, a feature that is clearly in very high demand. So we've got the tech, we have the big institutions, and we have shifting investor beliefs. But there's one more piece to this puzzle, and it's always the most unpredictable one, the political wild card. So recently, President Trump proposed a plan to give most Americans a $2,000 dividend, and the idea was to pay for it with tariffs on imports. The plan would cost about $440 billion. The problem? Well, the tariffs are only projected to bring in about $120 billion, and the whole legal idea behind them is facing a major challenge in the Supreme Court.
And it's not just a legal fight. The political opposition is fierce, even from inside his own party. Senator Rand Paul called the idea ridiculous, pointing to the country's massive debt. So the road ahead for a plan like this is, well, it's anything but clear. And this is exactly why politics matters so much to this whole story. Global instability, the kind driven by things like tariff disputes, can make traditional markets seize up. That kind of uncertainty can actually push people to look for a new, more resilient financial system, which is the very system that companies like BlackRock are building on-chain. A meeting like this one between Trump and Xi isn't just a photo op. It's a huge event for the future of both old and new finance.
Okay, we've looked at big finance, new tech, investor psychology, and global politics. Phew, now for the final step, let's connect all of these dots and see the single big story that these threads are weaving together.
So when you connect the dots, you see these four key forces all pushing in the same direction. First, you have this massive $2 trillion vision for the future being set by the big players. Second, those same players, like BlackRock and PayPal, are actually building the tech foundation on blockchains like Ethereum. Third, what investors believe and want is shifting. We see it with the bear market ending and that sudden demand for privacy. And finally, politics is acting like a powerful wild card, creating the kind of volatility that makes people want to change things faster.
Ultimately, this isn't just about numbers on a screen. This is a fundamental reshaping of how money works. We are literally watching a collision between the old money of Wall Street and new decentralized technology, with global politics constantly stirring the pot. And all of this brings us to the final critical question. As all this power and all this money collides, who is ultimately going to be the one to write the rules for this new world?